Assalamualaikum. Today we are going to do a new chapter, that is economic analysis. Alright, so let's have a look at what is economic analysis. Okay, so economic analysis is concerned with assessing the general state of economy. Okay, assessing the general state of the economy. So we want to assess or to analyze the general state of the economy of a country and its potential effects on security or stock returns. So imagine now we are the investor, okay, in the stock market. So that's why we want to analyze the economic analysis of the country. So kita nak tengok what are the potential effects on our security ataupun our stock returns. So there are two approaches to security analysis, okay, based on the fundamental analysis. We have the top-down approach and bottom-up approach. Okay, so the top-down approach, we start with the economy first. Okay, we look from the bigger picture. Okay, from the bigger picture first, start with the economy first, and then we narrow down to the industry analysis. And then the lastly baru we look at into the company, okay, the company that we want to invest in. Okay, so the company analysis ni macam contoh kita calculate the intrinsic value of the stock, okay, something like that lah. So economic analysis nak buat macam mana? So later we will look, okay. But then we want to look at the bottom-up approach. The bottom-up approach is the opposite. Okay, opposite of the top-down, which is the investor can start from the company first. Okay, they calculate the intrinsic value of the stock first, and then they look into the bigger picture. Okay, tengok in the respective industry, okay, that they want to invest in, and then lastly baru dia tengok the economic condition of the country. Boleh juga macam tu. Okay, so maksudnya yang ni start from the company to industry and economic. Okay, next. Key economic variables. So to assess ataupun to analyse the economic condition of a country, so kita boleh tengok the economic variables ataupun the economic indicators. So number one is the most popular one, the GDP. Okay, what is the GDP? It's the measure of the economy's total production. Economy's total production of goods and services. Meaning to say here, the rapidly growing GDP indicates an expanding economy. Okay, makin banyak GDP, makin sihat lah country tu, makin banyak dia punya production. Okay, next, the industrial product, IP index, show the changes of physical output of a country's factories. The index tends to move in the same direction as the economy. So meaning to say here, kalau GDP tadi naik, biasanya industrial product pun dia naik lah. Okay, they move in the same direction as the economy. Okay, which make it a good guide to business condition. And then the third indicator is employment. Okay, so to analyze the employment, we can look at the unemployment rate of a country. Okay, so what is the unemployment rate? Okay, it's the percentage of the total labour that is those who are either working or actively seeking employment yet to find work. Okay, meaning to say here, the employment rate measure the extent to which economy is operating at full capacity. So if the unemployment rate of a country is high, okay, meaning to say the country is not operating at the full capacity. Tak bagus lah macam tu So that's why ramai orang menganggur. Unemployment rate ni kadar pengangguran. Okay, next is the inflation. Inflation is the rate at which the general level of prices, okay, general level of prices is rising. Okay, so high rate of inflation often associated with the overheated economy. Okay, that is economy where the demand for goods and services outstripping productive capacity. Demand is high while the supply is low. Okay, so that's why leads to an upward pressure on prices. Okay, bila demand banyak, barang tak ada, so harga naik lah. Okay. And then next, the interest rate. So the inflation and interest rate also interrelated. So during inflation, biasanya interest rate is high. Okay, so the high interest rate reduce the present value of future cash flow, thereby reducing the attractiveness of investment opportunities. Okay, next, the fiscal policy. Fiscal policy refers to the government's spending and tax action. Okay, and is a most direct way either to stimulate or to slow the economy. So macam sekarang ni during the pandemic of COVID-19, banyaklah the government spending ataupun the fiscal policy used by the government to stimulate ataupun to boost the money into the economy, such as the government bagi package rancangan ekonomi to the SMEs and then bagi bantuan prihatin BBN tu, okay, so that the people akan ada duit untuk membeli to stimulate back the economy. Okay, next is the monetary policy. Monetary policy refers to the manipulation of money supply. Money supply, okay, to affect the macroeconomy. Monetary works through its impact on interest rate. Okay, so increase in the money supply, lower short-term interest rate, and encouraging investment and consumption demand. Over longer period, most economists believe a higher money supply leads to higher price level. So kalau banyak sangat money supply yang inject into the economy, so will leads to inflation pula. Okay. Alright, so now we want to look at the potential effect. What are the potential effect of the economic variable, okay, to the stock market? Okay, number one, the real GDP. Okay, the GDP has a positive impact and it's good for the market. So meaning to say here, if the GDP is increased ataupun is high, so it's a good effect, okay, on the stock market because the economy is expanding, kan? And then next, industrial product pun sama juga. So if the IP index is high, so it's a sign of strength, which is a good, okay, for the stock market. Next, inflation detrimental to the stock prices. Higher inflation leads to higher interest rate. So because macam tadi I mentioned, during inflation the interest rate is high, kan? Interest rate is high. Okay, so bila interest rate high, lower the PE multiples and generally make equity securities less attractive. Ataupun bila interest rate high, people are more attractive to invest in the fixed income securities that offer higher interest. Ataupun people will save the money in the bank, okay, to get higher return. Okay, which is in term of interest rate tadi, kan? So that's why the stock market become less attractive, okay, during high inflation. Okay, next, unemployment. An increase in unemployment rate means business is starting to slow down. Okay, so this is not a good sign lah. So if the country has a high unemployment rate, so maksudnya tadi kan the country is not operating at full capacity, ramai menganggur semua. Okay, so that's not a good sign, okay, to the stock market. Okay, next, the budget deficit. Budget deficit may be positive for a depressed economy, but can lead to inflation in a stronger economic environment. Therefore, have a negative impact. Okay, next, interest rate yang sama juga macam tadi ni during inflation. Okay, another downer rising interest rate tend to have a negative effect on the stock market for stock. So because of apa? Because of people are more attractive to invest in the fixed income security or just to save the money in the bank. Okay. Next, money supply, moderate growth can have a positive impact on the economy and market. Rapid growth of the money supply, however, is inflationary. So if terlampau banyak sangat money supply, okay, may lead to inflationary and therefore detrimental to the stock market pula. Okay. Okay, and then last one is a weak dollar. Weak dollar has a negative effect on the market because market less attractive to foreign investor. Okay, on the other hand, weak dollar makes products more affordable, okay, and cheaper in overseas market, and therefore have a positive impact on economy. Okay, so that's all for this video. Thank you. Assalamualaikum.